Where does it come from? Do you just print it?
As a central bank, we have the ability to create money.
Hey everyone, how's it going? Today is October 23rd, 2021, and today we're going to talk about all the things that happened in the last week and a little bit of maybe some stuff that happened in the week prior as I wasn't around for that live show. A lot of interesting things happened this week, but most importantly, if you're in the stock market, we're back at all-time highs. And so we're going to take a little bit of a look at the charts of the S&P 500 and QQQ, just to show you that over the last few weeks and months, while we've had all this fear with Evergrande and debt ceilings and all sorts of stuff going on, the stock market doesn't care. Inflation is it keeps on going, and it's bringing up all the boats that are connected with it. And that includes the stock market indexes, and it also includes Bitcoin, which just hit a new fresh all-time high beginning of this week because of the launch of the ETF, which we'll also get into as well. So, just taking a look at the monthly chart, we had September. We had all the fear in September. We thought, the VIX was going to spike, and it did for a day or two. And we all worried about Evergrande. And while we're not covering Evergrande this week, they have kind of defaulted on some of their bonds already, but it looks like there is some sort of contingency plan in place for people to pick up the scraps on it. And that's why the market isn't really reacting and doesn't really see much of a contagion effect going on with it right now. So S&P 500 back at all-time highs. QQQ not quite there yet. Some of the tech stocks were a little bit hampered by some of the stuff that happened this week, which we'll go into, but it's doing pretty damn well overall. And then of course Bitcoin, I don't have the chart right here today, that also hit an all-time high as well this week, which is great if you were holding and you kind of went through the last 3 months thinking, oh, maybe that was the top, just to see it kind of make a new all-time high without nearly as much euphoria with the general public. So it's really interesting to see the Bitcoin price keep on rising without that insane rush of new investors. It's just doing its thing, grinding up the slope. So this week, I wanted to take a look at a couple of stories that were specific to stuff that happened this week, but kind of exemplify, I think, the state of the market that we're in, the state of inflation, how people think about money. And I think one of the best examples of this was this new SPAC that went public this week called DWAC. Now, it actually didn't go public this week, but they announced that their merger acquisition. And so this is a company, basically, let's just check it out here, that was named Digital World Acquisition Group. The stock is DWAC. Their stock went up 1,400% because they announced that they were going to merge and take Donald Trump's new social media platform in development public. And so this platform is called Truth Social, and basically what happened is they announced it. On the first day, the stock ran up 300 or so percent from $10 to about $45 a share. And then the next day it opened at 90, 100, hit $170 at one point. So we're talking about a 1,700% move in 2 days. And people say cryptocurrency is crazy. So the whole story here basically is this SPAC announced that they're going to acquire this company or kind of merge with it and bring Donald Trump's company public. And of course there was a retail frenzy with this. One of the things that I also noticed too is that let's just call them the old guard of January, February meme stocks, AMC, GameStop, Smile Direct Club, all those stocks tanked, and that's likely because money was rotating from those names that had maybe been bag holding them or had been in them for a while to kind of take advantage of the volatility of this new one. And so what is the deal with this whole thing? Well, people can speculate on the value of the stock however they want. There's a few different ways that maybe people might be able to justify a 1,300% move. One of them is that Donald Trump has around 60 million or had 60 million unique social media followers on Twitter and Facebook before he was kind of kicked off those platforms. And that if only 25% of those people joined whatever his new platform is, that would be about 15 million users. Whether or not they're active every day, who knows? But that could maybe lend a bit of a credence to a valuation of around, I think, about $1 billion where the SPAC is currently valued. The question is we don't really know how much ownership in this new enterprise of Trump's that DWAC actually has. It can be something where they issue shares, they dilute. I would imagine they'll probably dilute after such a massive stock move that they probably were not anticipating. But as for the staying power of the network, we don't really know as it hasn't launched yet. And in fact, somebody did find the back end of this website and was able to actually make a bunch of spam accounts on it. So they did find the website under development, and someone actually took Donald Trump's handle and started posting on it, and they were later deleted off of it. But yeah, not a great start to it. But again, we don't really know what this thing looks like. I don't think there's a date as to when this company is going to go live. But I think the goal of it overall is to provide a more censorship-free, maybe conservative-leaning social media network called Truth Social. So we'll see how that pans out. But yeah, what I wanted to kind of discuss with this story is like, what is it all like? Does this really exemplify anything in the market besides just more of this greed? And I feel this year, 2021, more than any other year, and I've been trading since 2016, we have just had one cycle bubble after another. And maybe I wasn't paying attention in the other years. Maybe social media wasn't, as big for stocks as it was this year with the meme stocks and all that. But we have had, the GameStop thing, bringing these brick and mortar retail locations out of the grave by making these big fan followings for them that kind of came out of nowhere. It started as a short squeeze thing and it turned into, kind of this movement. You had Bed Bath & Beyond pumping. Just this whole, I guess you would say, sector of stocks that were well-known brands, but just hit hard by the pandemic and hit hard because everything is moving to online entertainment. And those things kind of got a breath, a second chance, and they've actually held up fairly well. Like GameStop is still, worth 15 times more than it was last year. And AMC is still worth, like 20 times. It was near bankruptcy. And because of everything that happened with the meme stocks, they were actually able to finance and create new shares and get a whole bunch of excess capital to keep their business afloat through the pandemic. And now that movies are going again, they're doing just fine. This second wave of stocks is really interesting because, like GameStop and AMC back in the day, when they were moving really volatile, they would get halted. So every couple percent, if they move 10% in a minute or 2 minutes, the NASDAQ or the NYSE has these things called circuit breakers. So they stop you from trading them temporarily, and then they resume after 5 or 10 or 30 minutes. And so I was trading these things pretty actively on Thursday and Friday, and I was noticing this keep on happening. But one of the interesting things about these stocks in particular is that they have warrants, and warrants are sort of like tradable vehicles that also entitle you to purchase a stock by a certain date at a certain price. So they're kind of like options, or kind of like buying coupons for the stock at a future date. And these things don't get halted. So what made this kind of a bunch of meme stocks different, and there's another one too called PHUN. PHUN is they were some sort of advertising software that Trump's 2020 re-election campaign was running as well. And so that one also did 1,000%. But one of the differences, again, with these stocks is that because they had warrants, they kind of had a way to trade when the main ticker wasn't trading as well. So from a trader's perspective, it's really interesting because you have a lot of people that get stuck in these halts. When a halt happens on the way up, usually it opens higher because you have a whole bunch of people market ordering likely before the halt happens. And then it's the same on the way down when the price is crashing down 10, 15% and it gets stopped by the NYSE and the NASDAQ. Likely as soon as it resumes, a bunch of market orders go in to sell it and it gaps down. And so I think a couple years ago, I don't know how long these circuit breakers have been in place, but they were implemented, I think, a couple years ago to kind of prevent investors from getting hit by volatility. I think when COVID was happening, even S&P 500 and NASDAQ had a couple circuit breakers hit because they were dropping 7% in a few minutes as well. But the idea of putting these circuit breakers on was to protect investors. It was like, well, we're going to just stop the prices from collapsing completely and messing up the order books and things like that. And it was to kind of bring this semblance of order to the stock market. But I think, in fact, it's done the opposite. PHUN, which was one of the stocks that was trading on Friday, it ran from like $7 to $18 and it halted there. And usually the halts are 5 to 10 minutes, but it halted for about half an hour and then it opened at like $9. So anybody who had bought before the halt immediately was down 50%. And so retail investors, they use market orders. They usually don't use limit orders to try and get filled. They just want to have the stock right away. Robinhood kind of, presses the use of market orders by default. And so there's this idea of like, we're going to use circuit breakers to protect investor to keep some sort of semblance of order in the market. But really the people it hurts the most, who are supposed to be protected, are the retail investors. And so I just think it's another example of the regulators being unable to protect users. And in fact, I think harming them in a certain way. They let the warrants trade as well, which is, like having a secondary, it's like having the options trade while the stock is frozen. And in terms of volatility, the SEC still will not approve the Bitcoin spot ETF, which is an ETF that is backed by real Bitcoin, not futures, which was the one that was approved this week. The SEC won't allow that to be traded because they think the markets are too manipulatable, but they let stocks like this trade, which move like 50% in minutes after halts, and investors get stuck, and people are left holding the bag for all sorts of reasons. You know, I knew people who got margin called the other day as well, and like it's crazy. It's craziness, and you know, it actually makes the crypto markets look very sane because these things operate 24/7 with no intervention. And you get a couple anomalies every now and then. You'll have this price spike down, you know, 20% because some person will just sell the entire order book. But overall, I think cryptocurrencies trade a lot more fairly and efficiently than some of these meme stocks do. So, yeah, just my thoughts on that. But yeah, my advice is like, unless you're really experienced with trading these things, you were there for the meme stocks, you've been around for a very long time, don't mess with these. Like, you know, you might say, oh, I missed out on the 1,500% gain or whatever. But there are so many more people in every single one of these stocks that lose money because they end up buying the high and they end up buying the hype. And it's really hard to tell what can happen with these things. They can also get halted for who knows why because of regulatory issues. And that's, again, why I prefer to trade cryptocurrencies, is because there is a safety to them running 24/7. You know, you can have stop losses and you can have limit orders, and these things can be kind of protected because you know that the stocks or the cryptos are never going to be stopped at any point in time. So again, stay away from these things. It's fun to watch them. If you're so tempted to trade them, it's basically like gambling. Do it a really tiny amount or just do paper trading. That's just my 2 cents on these ones. So the next thing we're going to talk about is the Bitcoin ETF. So if you guys were following along for the last few weeks, we were saying we got a whole bunch of dates coming along for potential ETF approval. And the SEC can approve the ETFs in one of two ways. They can either say, yes, go for it, or they can just not respond. And then if a certain deadline hits and if they just don't say anything, the ETF automatically gets approved. So they have to deny things to stop them from actually going into production. So basically what had happened is Gary Gensler hinted quite well over the last few weeks and months that a Bitcoin Futures ETF would probably be approved. And so we've talked a little bit about the differences between these Futures ETFs and the spot ETFs. One of them is backed by these contracts that kind of try and track and predict the price of Bitcoin, but don't actually represent holding any underlying Bitcoin. And then the other, the spot ETF, is actually something that holds a physical quantity of Bitcoin and tracks the price kind of accordingly based to the holdings. And so the futures contracts versus the spot ETFs on the surface don't appear that different. But the big problem with the futures ETFs is that there are so many middlemen that take little chunks out of it. And then these futures ETFs over the long run can really lose correlation with the actual price of Bitcoin. So the CME futures, they try and kind of stay more or less within the price of Bitcoin, but if there's a big demand for the futures and not as much for the actual physical Bitcoin, the futures can end up going way higher than the actual price of Bitcoin. And we saw a little bit of that happen this week because you had all these people really excited to get these futures ETFs, yet none of that money was, or not as much of that money was going into actually buying the physical backed Bitcoin. The question is buying this Bitcoin ETF worth it? And my simple answer is no. Stay far away from it. If you have to buy Bitcoin or you want to buy Bitcoin to add it into a TFSA or a 401k, there are so many better options than these ETFs. The point of these ETFs was to give people easier exposure to it, but again, it's not correlated. They're not that correlated with the price of Bitcoin to a good degree. And so you have other options like MicroStrategy. But one of the problems is that futures contracts, again, are not like buying real Bitcoin. So they're kind of like buying coupons that entitle you to the price of Bitcoin. So when a futures ETF is running, they have to constantly buy forward contracts, or if they have to roll over contracts into the future. So if the Bitcoin price is elevated, sometimes you get this thing called contango, where the Bitcoin futures contract you're buying, maybe it's for October 31st, might be expiring and you got to move it into November 31st ones or December 31st ones. Those might be trading at like 5 or 10% higher than the actual price of Bitcoin. So what's going to happen to the ETF is the ETF might jump ahead in price. And then when that premium comes down, but Bitcoin price goes up, then the ETF might be going down while the price of Bitcoin goes up. So it gets really confusing. And then also, if Bitcoin is a bear market, you have the opposite thing, where usually when assets are in a bearish environment and people think that the price is going to go down in the future, the futures trade at a discount. So what'll happen is the price of Bitcoin might drop 20%, but the futures ETF might drop like 25% as people say, look, we're entering a year-long bear market or a 2-year-long bear market for Bitcoin. And again, at the end of this, it's just like, what is the point of Bitcoin? Why are we all in this digital asset revolution? It's really to own something digital that has the qualities of owning something physical that you can have. And that's really what Bitcoin is. It's this kind of representation of digital gold in a way, something that we can take possession of that is still digital and virtual online, but we can still own our own keys to and kind of have access to, and no one can really take that away from us. It's our own sovereign currency that is digital, and having a ETF, which is basically just a fund that is managed by these futures creators that take their slice. You have the contango problem, you have the auditors, you have the lawyers, you have all these little people in between taking their slice out of what is supposed to be an ETF that tracks a currency that you can buy pretty damn easily. Kind of doesn't make a lot of sense in my opinion. So again, I guess my other question is like, is there a point to owning an ETF at all? Well, yes, it makes it more institutionally acceptable to own Bitcoin. But, you know, the question is do we really need that acceptance for Bitcoin to survive? Maybe we need it to appreciate to a certain price. Maybe hedge fund managers need to have a way to get into it. But the ETF has not been the only way. We've seen institutions buy Bitcoin. There are ways of doing it in your accounting. The ETF is good insofar that it gives, I guess, more confidence to investors to get in who already haven't at this point. But it is not the be-all, end-all, and I don't think we really needed it to get back to 60K. But clearly the market liked what it was seeing, and that's why it's kind of run up, I think, pretty quickly to new all-time highs. And again, my advice, if you're watching the show and you don't already own Bitcoin, the best way is to avoid all of the synthetic products, even MicroStrategy. It's a great company. I did a video on it. But if you want to own Bitcoin, just buy the real thing. You have ShakePay here in Canada. You have Robinhood is actually going to let you withdraw Bitcoin that you buy off there. So it's almost like having your own keys if you can set up your own wallet. And in the coming weeks, probably before I leave to El Salvador, I'm going to make a video on how you can set up a Ledger wallet and then just take physical possession of your Bitcoin. Once you do that, and once you experience how that works, you really start to understand what makes this different from owning a stock, because you're fully in control and in possession of the asset. I know a lot of people that watch this show probably only deal with cryptocurrency on exchanges. I know people who trade millions of dollars of cryptocurrency, and they don't actually know how to withdraw it off an exchange, or they've never done it before, which is quite wild to me. But, you know, I guess it's not really necessary if you trust your custodian. And now, finally, for the most interesting story of the week. Oh, yeah, and one more thing about the GBTC, or the Bitcoin ETF I wanted to show is that, one more thing. GBTC, which is one that we've talked about as well. It's this Bitcoin trust that has more or less tracked the price of Bitcoin. It's trading at this really negative premium right now. But ever since the ETF went live, they have actually outperformed the ETF. So you can actually kind of see here, this is the CEO of Grayscale. You can see how, you know, the orange line is GBTC, the blue line is the Bitcoin trust. They traded kind of in tandem, but as Bitcoin went up, GBTC outperformed while the Bitcoin ETF was kind of lagging behind. And then on the way down, the Bitcoin ETF experienced kind of a sharper decline while GBTC kind of held a little bit of its own. So there's a 4% difference there between how these things performed in the last 2 days of the trading week. So it just goes to show you that, again, even out the gate, 2 to 3 days into this, the Bitcoin ETF is outperforming even the synthetic instrument GBTC. So yeah, better to own the real thing, ignore all the noise. All right, so next story we're going to talk about is we're going to talk about the Metaverse. And so this week, everyone started looking up the term Metaverse. So if you look at Google Trends, chill, maybe a couple people heard of it. All of a sudden, everyone's talking about it. Why is everyone talking about it? What is it? We're going to dive into what it is. But most importantly, to kind of preface this story, Facebook is one of the largest companies in the world, and they're changing the name of their company, or maybe just the parent entity, to something else. And we don't know what that name is yet, but they have said we're going to change it to something that reflects our kind of dive into the metaverse. So Facebook, an advertising company, also owns Oculus, which is one of the VR headset and software producers. And Mark Zuckerberg has shown a lot of interest in the last few years about making more virtual reality applications, games, but also integrating it into our everyday lives as something that we actually use. So instead of going to a Zoom meeting, maybe we put on the headset and we meet around a virtual table. And so for a lot of people, this seems like a gimmick. There's a lot of a lot of fun things that you can do in VR, but for most people, it's kind of this gamification thing. It's not something that people take seriously, that are kind of in the mainstream. But in reality, the metaverse, so-called, has actually existed for a very long time. And to kind of just summarize what exactly the metaverse is it's a network or an interface of 3D game-like virtual worlds that allow us to create and interact in virtual space with usually simulations of real-world activities. So there are games like Second Life where you can walk around, you can have a house, you can build things, you can have conversations with people, and you do all these things virtually. And so if you think about massive multiplayer online games, they're a little bit like their own metaverses as well. So if you think about World of Warcraft, going out and maybe you're killing orcs or pigs or whatever, you're doing quests with your friends, you're just doing things and interacting in this virtual world, maybe doing things that you might not be able to do in the normal world in a social environment. That is basically a metaverse, right? So increasingly, people have been creating these metaverse worlds and these games that kind of create and replicate the economies of scale that we have in the real world. So these metaverse universes, some of them have their own virtual currencies, and maybe they don't have their currencies. You just have to work to make things. But increasingly, a lot of them are getting into their own financial services. So you can go in and you can buy property. You can get mortgages with in-game currencies that you can buy with real dollars. And so maybe the boomers out there or the people that are not into video games might think like, why on earth would you ever spend money to partake in this virtual world? And I'm going to kind of clear up a couple ideas behind this because I've always thought that too. It's just like, why would I spend so much time in the metaverse? I've done a little bit of World of Warcraft, Final Fantasy Online, PlayStation Home was a thing for a while. But I've never gotten fully into it because, at the end, you kind of feel, I don't know, some people can get a lot of satisfaction in interacting with these things on a daily basis, but I feel like if you don't have everything right in the real world, then you kind of step back when you're done playing one of these games and say, like, I got to get my stuff done here to even finance my metaverse life. So one of the things that is making the metaverse increasingly different, though, is that a lot of these applications are actually letting people have jobs, which is really weird if you think about it. But in Second Life, for example, I was looking this up, you can actually get paid in virtual currency that can be transacted into real currency for being a DJ at a virtual nightclub. So you can go and you can pick songs and you can create your own lighting schematics in a completely virtual world, and you can get paid real world dollars for this, right? And there's other utilities for the metaverse too. Like you could just translate live poker tournaments to the metaverse. So I can put on a VR headset and I could just join a poker room and I could have real money or virtual currency and I could be playing real games in the metaverse with real people. Playing poker in VR is actually a really interesting experience because as opposed to online poker where you're generally just, clicking buttons on a keyboard and you're just getting the input commands of the cards, you can kind of see the way that people move their heads and their hands, and sometimes people talk and they do it socially. And I imagine in the future, when maybe VR headsets change, people might even be able to translate what their eyes are doing, their eye movements on the poker table, or wear glasses, or you'll be able to kind of read someone's face. Maybe we'll have things where we do VR poker where faces are being scanned actively. So I can be sitting in front of my computer, I can join a poker game, and my avatar there replicates the facial movements that I am. Because again, when you're playing real life poker, there's a big element of kind of reading people's faces and expressions on top of seeing the card action and what people are doing. And there's tells, like people messing around with rings and things like that. So again, we can bring some of these games into the metaverse with better technology, and it kind of enhances that level of immersion. So how does Facebook define it? Well, Facebook defines it simply as a set of virtual spaces where you can create and explore with other people who aren't in the same physical space. So right now, I'm sure that they see a lot of opportunity for it, but one of the things that Mark Zuckerberg has been pushing has been to get more social interaction going. So just meet and greets, hanging out with friends. I have this game on my VR, just playing mini golf. It's not super accurate, but again, you can get that experience of just playing around in mini golf with your friends in these virtual worlds really easily as well. And again, the biggest question with all this is like, okay, all this virtual stuff is cool, maybe it's gimmicky, but what actual real world problems does it solve? So one of the things I think for sure is it can enhance that social interaction online. With lockdowns, we saw a lot of these metaverse applications and different, virtual worlds really take off because people were alone in their houses. They wanted the feeling of communicating and being with other people. So all of these applications where you could join a party online or play video games, all these things saw huge spikes in use over the last year, VR or otherwise, just because people wanted to feel that feeling of connection. And so it can really provide you that in times where it's not possible to get that. So generally, we don't always have a pandemic, but you might live somewhere, off grid. Maybe you're doing off grid farming, and you don't want to be lonely your whole existence out there. So as long as you have an internet connection, you have the hardware, you can join and have that experience of being maybe a little bit in a society and enjoying time with other people. And I think that's a really killer app, especially as we start to see all these cities get really, really dense, and there's this kind of urge for people to move off grid. But to not have to give up, the social life by having these social applications like VR, people can kind of be in the middle of nowhere and still feel connected to everyone through these platforms. And I think that's really cool. I plan on doing it personally. When I decide to move out, to my place on the island and I get a house, I'm going to make sure that I design a big enough room so that I can walk around it in VR, something that's at least 20 by 20, so I can just walk around and then play some of these games. Because I have done the poker and all that, but you're on an island with a small population off grid, you can hang out with your neighbor, but you can also spend a lot of time on VR easily as long as you have the internet connection. So I think it's a killer app for people. I'm sure that there's some business that is pioneering, building VR rooms in people's houses too, because you can get camera trackers and you can get these VR things where you stand and it's like a 360-degree treadmill, so you can emulate the real experience of walking in these virtual worlds as well. So again, what about other problems that these things solve? Well, people are also increasingly valuing virtual property. So we talk about NFTs on this show sometimes, and a lot of people still don't quite understand, what is the value of owning a JPEG, of owning a piece of art here or a little collectible there, when it's just a file that you can have on your computer, just some data. What is the point of having the ownership? Where's the value? Why are people paying hundreds of thousands of dollars for these things? Well, there is a value of having ownership. There's a value of being a part of a community, and most of the successful pieces of NFT art are usually because the project has some sort of community that's really valuable that people want to be a part of. But what the metaverse also does is it takes this idea of virtual property and it gives it physical attributes. So you can own an NFT that might give you access to a 3D item that you can have in a game that allows you to access new functionality, or just be something that you can show off to other people that join your place in the metaverse. The thing that's really important to remember about the metaverse and all of these things that we're really interested in talking about is that they all have network effects. So the more people that interact and are interested in the thing that you're doing, or you're talking about NFTs, Facebook, Bitcoin, or whatever, the more people that are involved in these networks, the more valuable the networks themselves become. And when they start to lose users and when people stop caring about them, they lose a lot of value. So the metaverse is in a really early stage because not everyone has virtual reality headsets, not everyone's playing these games, but the more people that get into it, the more that every sort of property becomes more valuable in these places, and the more that people want to spend more time using them. In the beginning of Facebook, you maybe, checked it every couple of days or so, but then when all of your friends from high school, your parents joined or whatever, you were on it for hours and hours at a time. And maybe now, as you're getting sick of Facebook and you're sick of the spam and all that, you're spending less time. So again, network effects, they work both ways. They retract when the content and the participation goes down, and they get enhanced and people spend more time as the participation grows. And that's basically just the internet in a nutshell as well. And again, one of the important things with the network effect is that if people become more addicted or more active on the metaverse, it also creates new opportunities on it. So we mentioned how on the metaverse, some people actually have jobs. And just like how Facebook and Instagram spawned basically, I would say, e-commerce, e-commerce advertising, there's a whole new frontier of metaverse economics, which is that you might be able to create or sustain a product or a business completely virtually. And that creates a whole new incentive for people to have a participation in these things. So, for instance, you used to have to be a network to get a television show, and now you can go onto YouTube and you can start your own thing. And as long as you can get enough people on the YouTube platform to watch you, you can sustain that as a business model. And as YouTube as a platform grows, and as more people spend 4 hours a day on YouTube versus 4 hours a day on television, the opportunity for you to have something that exists like this as a permanent career is bigger. So it's solving the problem of people's creative urges to make something that used to never have an audience before. So you might be, a really good craftsman or an architect, but, maybe you're having trouble building things. Well, maybe you can get hired to build things in virtual reality. And as crazy as that sounds, it's already happening. You can't deny its existence. And I think building out the metaverse and building better hardware to make the experiences more immersive and then better software is just going to bring a lot of people who might do something in the physical world decide to take that skill and develop it in the virtual world as well. And what I would say is just have an open mind about all these things. Don't play it off. In the 90s, you would have been laughed at for thinking that the internet would revolutionize advertising, for instance. Going all in on Google or thinking like, oh man, I got to build online ads. It would have been crazy. People used to never think they needed video for advertising as well. Print advertising was everything. You could write something, you could maybe take a photo of it, but you would never have to make video. Now, if you have a successful brand, you need a video strategy, and that's all because of the internet and online advertising and the ability to create digital media as well. And then think of younger generations as well, because while you might not understand things like NFTs, younger generations do. And that's really who is inheriting all of this stuff at the end. The second biggest generation after boomers are millennials. A lot of millennials are the kids of boomers. They're going to be inheriting all this wealth, and they've already made their decision, and the market has reflected that in terms of gold versus Bitcoin. I think a big reason that Bitcoin is where it's at is because millennials have embraced digital property ownership over physical property ownership. They have a lot of the same characteristics, Bitcoin and gold, but clearly if there was a demand for younger people to own gold, you could poll younger people and they would own gold for the most part. And some people think, oh, well, when they get older, maybe they'll understand the merits of gold. And to that, I would say, I don't think so. So really quick here, I want to talk about a couple of the problems with the metaverse, because like, a video game, it can become addicting and it can impact your overall standard of life if you become part of the metaverse and kind of put aside all the other things in real reality. And so one of the things that people worry about a little bit with the metaverse, or maybe something that I've kind of thought of, is that birth rates could probably be affected by this as well. Why have kids in real life when you can have them virtually? If you're interacting with someone like a million miles away, why uproot when you can, have something virtually? Maybe you can spawn an AI baby and have the feeling of parenthood without actually having to meet a mate. Maybe that's out of line or a little bit weird, but people have noticed that there is a correlation between playing MMOs and video game addiction and having steady relationships. And that's one of the reasons why in the last couple episodes we talked about how China was putting a limit on how many hours a week you could play video games with. And their thesis was that it was really connected with the birth rate in that country, which has been declining rapidly. And they've opened up, they used to have the one child policy rule. They moved it to 2 children, 3 children, 4, 5. Now they're offering incentives for having multiple children, and they're trying to get rid of practices like excessive video games that are stopping young men or young women from going out and finding a partner in the real world and building a family. So the thing that's interesting, though, is other governments have different perspectives on birth rates. Some countries want to lower the birth rate. Some want to increase it dramatically. I believe Japan has one of the lowest birth rates out there. I know in North America, it's been declining rapidly for years. So, some people say we need to decline birth rate if we're going to be able to handle global warming. If we have too many people, we'll never be able to catch up and handle all this stuff. That's one way to look at it. Another way to look at it, though, however, is that if you have declining birth rate, then the average productivity of each human has to go up in order for an economy to grow. So you might have automation and that might increase productivity. But if you have a declining population, who is going to take on all these jobs? And right now, I would say, it would behoove us to have a higher population, because right now you have all these jobs and all this demand for things, but not enough people to actually do them, or not enough people that actually want them. So there may come a point where too low of a birth rate is a bad thing, and that can be directly maybe connected to the metaverse in the future as well. All right, so last thing that we're going to talk about when it comes to the metaverse, and you can I'll give someone like $10 so they can count how many times I said metaverse in this episode. Please don't actually do that. That's a complete waste of your time. But ways to invest. there's two angles. There's the hardware angle. You can be investing in some of the tools and, I guess, computers that allow you to interact with the metaverse, whether that's VR headsets or camera trackers or things that help you touch and feel things, haptic feedback. Or you can invest in what I think is probably the larger element of the metaverse, which is the software. So that's some of these game creators of metaverse worlds, or people that are creating software so that you can own pieces of property like NFTs and things like that as well. And so I have a couple ideas for it, but one of the things that's really important to note with investing in this kind of space is there's very few pure plays. Every single play is something different, and every single metaverse universe is kind of its own network. So it's really hard to kind of track all of them similarly, like it is to invest in cannabis. You can invest in a sector or an ETF that's going to do well. They have begun to come out with ETFs for the metaverse, but again, I think it's really hard to get a stock that is going to accurately track something like what this graph is going to look like in the next 5 years. For instance, there have been software plays that have really come and gone. One of them was Pokemon Go. I would argue that that is a metaverse thing. Even though it's not completely virtual reality, it's taking a different universe and kind of bringing it into the real world. And so there was that blissful moment in 2016 before we had insanity in the real world, where everyone was walking around with their phones trying to find Pokemon, and people felt really united in that, and that was like a multi-month phenomena. But again, what happened is, as that peaked, as people kind of started to get tired of the game because maybe they didn't add enough functionality to it, or they didn't have enough to keep people there, people dropped off, and gradually you probably stopped playing it as well because your friends stopped playing it. So again, all these things move in networks. If all your friends are playing it, eventually you jump on board. If all your friends stop, eventually you drop off as well. And so that can be something that's really important to think about when you're buying a stock in a company that is making some sort of metaverse software. Is their thing growing with a network effect? You have to find other ways of tracking that, just besides just looking at the stock price. The stock price can tell you a little bit of what's going on, but it's really important to look at user growth and average user participation if those stats are available for whatever you're doing. So yeah, software can come and go. But again, it is interesting because it does kind of spread like a virus when it really takes off. So again, network effects, network effects, network effects. More people interacting with it, the more value that everyone gets out of it. The fewer people interacting with it, the more value that it loses over time for everyone. And the easiest way to pay attention to this is social metrics. If you can find out how many people are interacting with something, a lot of these stats are online for a lot of games. And to take a look at the charts as well, because I think that's really important. A lot of the problems too with metaverse applications is that they're owned by parent companies. So again, very few pure plays in the game. If you want to invest in virtual reality, for instance, the biggest creator of virtual reality consoles is right now Facebook, but Facebook's advertising business is still like 90% plus of their revenue, or maybe a little bit lower. Whatever happens with virtual reality, I don't think right now has a material impact on their balance sheet compared to what happens with advertising. So again, really hard to find pure plays on this. And then also hardware producers at large, you'll be sold, like Nvidia might be benefiting from the metaverse, or AMD because they're making microchips, which are in all the headsets. But again, we don't know that these are going to be material parts of the revenue compared to things like computers and phones and all that. My suggestions are these ones that I've looked up. There's Roblox, which is kind of this online massive multiplayer game that has a stock. And so when you invest in that stock, you're investing in basically the game itself and the growth of that game. That stock has done tremendously well. That went public a few months ago, I believe. And then you have the cryptocurrencies, which deal with NFTs, which are their own ecosystems. And so basically the cryptocurrencies benefit because you usually have to buy into these cryptocurrencies to gain access to the different metaverse worlds. And so the ones here, the obvious ones are Ethereum, Solana, and AVAX, which you can buy on any of the exchanges. But again, there's a lot of other factors that influence the price. They do a lot more than metaverse stuff. There's DeFi applications and a whole world of things with them. So again, not quite pure plays, but I would say for sure that Solana's growth over the last few months has been linked to NFTs, which eventually will have an application in the metaverse as well. There's one called Mana, it's a currency in this online game called Decentraland, and that's kind of this massive multiplayer online game that has a cryptocurrency at the heart of it. You can buy property, you can interact with things. That's been around for 4 or 5 plus years, and I'm sure that currency will also grow as the users grow and use that platform as well. And then, of course, the blue chip one is Facebook. Again, majority of what they do is advertising, but, go from there as to see if that is going to develop into a material part of the revenue. And we'll stay tuned because I think this week or next week we will hear about what the new name of the Facebook parent company will be. But yeah, that's everything for today's show. I'm curious if anyone here does anything in the metaverse. If you have a Second Life account, you play EVE Online or any of these games, how often do they take a part in your life? Have you noticed yourself playing more of it over time, or are you retracting from it? What is your take on the metaverse? Do you play virtual reality? If you have an Oculus, I'll post my username here. I don't remember what my username was, but that's something to do as well. I haven't played virtual reality in a while, but I'm probably going to get into it as the weather gets crappier around here and I don't want to go outside to socialize. But yeah, thanks so much for watching, guys. We'll see what you guys had here in the chat here. Hey, Julian. You guys are too kind. Richie Rich, I'm in Canada, was ripped off by the Quadriga scandal a few years ago. I no longer trust the exchanges, so I've only been buying GBTC versus BTC. What exchange do you use in Canada? Good question. I was also ripped off in the Quadriga debacle. I use ShakePay to buy Bitcoin, and then basically as soon as I get a nice enough lump in ShakePay, I move it offline to a ledger, which I am making a video of here, and maybe after I will give away one of these things. But basically a ledger is like a little safe for your gold / digital gold, and as long as you keep that safe somewhere, there's also a backup key in case you do lose this or it breaks. No one can steal your Bitcoin, and so for me that's the best way to hold it long term. To really buy into Bitcoin long term, you can buy it all in one go, but I like to do it over multiple weeks or days. And so what I'll do is I'll wire money into ShakePay. I'll buy it every day or every week, and then once I get a couple weeks or months worth, I will transfer it offline onto the ledger. You could theoretically transfer it every day if you wanted to, because ShakePay doesn't have any fees. But again, that's what I would recommend as a platform for this thing as well. Cool. $10 Vicky. Yeah, don't count how many times I said metaverse. That was a stupid prompt. But yeah, hope you guys like this week's show. I'm going to dig a little bit more into the metaverse. I'm sure there are different ways to invest in this moving forward. I feel like it's funny that Roblox is probably the biggest thing in terms of a pure play, just because it's it's just the game and that company's just around that game. But I think I don't think everyone in the world's going to be playing Roblox, but it's the closest thing that we have to Ready Player One that you could invest in, apparently. So that's it. All right. Thanks so much for watching, guys. Hope you have a fantastic rest of your weekend, and I will see you next week with whatever the market brings us. This week was a doozy. I hope next week's not as much of a doozy, but we'll keep learning together, and we'll have fun doing it. Take care, guys.